All right, what's up, everybody? Welcome to the Smart Capital Podcast. Today, I want to talk a little bit about the market. 2023 has been a very, very, very interesting year. So we're about a little bit more than halfway through the year, and let me kind of just run down what's happened over the last 12 to 18 months. So in March of 2022, interest rates started to shoot up, right? So over the last year or so, we've had a lot of interest rate increases. So that's been something that a lot of people have been shocked by, right? So it's caused a lot of people to slow down, to stop buying, or also get kind of pushed down into cheaper properties. In the multifamily sector, it's been very interesting because a lot of owners have refused to accept the interest rates and they have not wanted to lower their price, right? So some investors, and particularly investors who have cash, they've been coming in and buying properties and they've been paying a lot over really actually what they're worth, especially with the particular interest rates, right? So it's been very interesting to see what happens. So everyone's kind of predicting, wondering, is there going to be a recession? Will there be a recession? We don't know because actually the Fed was purposely trying to slow down the economy. So for the last year, they've been trying to slow down, the government has been trying to slow down the economy in an effort to curb inflation, right? So inflation has been crazy the last couple of years. That's why the cost of everything has gone up. Rent has gone up, eggs have gone up, milk has gone up, whatever you buy, chicken wings have gone up. Matter of fact, that's been the craziest thing, right? I went and got some chicken wings the other day, and I think for 10 wings, it was like $24. And I was like, whoa. Like I know, like, it was back in the day, but I remember like wings used to be like 50 cent, 99 cent, like something like that. Now wings is like 250 a piece, right? So that's what inflation is, right? And that is why you have to invest, right? So I always tell people is, a lot of times we want to save money, we want to just have money sitting around, but what you don't realize is that the value of that money steadily declines when you have inflation. However, when you have assets like real estate or other assets, they actually increase in value during times of inflation, right? So over the last, just give you an example, right? Over the last 3 to 4 years in Florida, the prices of property have increased 46%, right? So if you had $100,000 property, all right, so let me just give you an analogy, right? Let me give you a comparison. If you had a $100,000 property, right, or you had $100,000 in the bank, so what that $100,000 in the bank has declined in value at 8 to 9% for the last 2 or 3 years, right? So that's a 24% decrease, right? So that $100,000 is effectively worth about $76,000 now, right? Now, if you had $100,000 property, that $100,000 property would be worth $146,000, right? So the difference between 76,000 and 146,000, right? That's what, about 70 or so thousand, right? That's a big difference, right? And that's just in a 2 or 3 year time span, right? So take that over 5 years, 10 years, you can see why there's a big difference in wealth between people who invest and people who save, right? Now, I understand people's concerns about investing because it can be scary, right? It is safer, obviously, to save, right? That's safe and save kind of go right next to each other. However, what you have to understand is, and what you have to think about is, when I retire, or when I'm in my latter years, or when I'm in another phase in my life where I'm not earning as much money, is the amount of money that I have now, is that going to be enough, right? So a lot of people who retired over the last few years, they thought they had enough money and they realized they haven't, right? So saying all this to say, investing in real estate in particular is a way to kind of hedge against inflation, right? So you might not want to have all of your money in real estate. You might want to have some in stocks, some in savings, some, in real estate, but you want to make sure you have at least some of your money invested in real estate. And I think that's one of the key takeaways from the 2023 market is that you want to have some money in real estate. So a lot of people are projecting that in the fall, in the winter, somewhere in that range, we're going to start seeing some defaults. We're starting to see some defaults in the office space. We're starting to see some defaults in the hotel space, right? Some people who just can't pay, right? Because what happened was a lot of people got cheap debt in 2020, but that debt was what we call variable debt, meaning that over time it changes. So now 3 years later, they're calling that debt, right? And they're having to refinance at an interest rate that doesn't work, right? So if you bought a property at a 3%, you thought it would be a 3% interest rate, and now that interest rate is 7%, now your payment is twice as much as you thought it would be, right? So unless you can charge twice as much in rent, you're not going to be able to cover those expenses, right? So in the hotel space, in the office space, there's a lot of distress. So these are opportunities, right? So people who are interested in getting into commercial deals, getting into bigger deals, a lot of people now are buying office buildings and converting them into affordable housing. A lot of people are buying old hotels and converting them into affordable housing, right? Or even sometimes not affordable housing, right? Some people are converting these offices into like luxury condos, right? So there's a lot of different options. So one of the things I want you guys to do is always think outside the box and be creative. Um, there's always an opportunity in any given market. 2023 is going to be an interesting year. 2024 will be a very interesting year, right? So let me kind of put my crystal ball on right now and kind of project out to 2024. So of course, we don't know, but one thing we can say is that 2024 is an election year, right? So, whoever you're for, if you're for Biden, you're for Trump, you're for whoever, someone's going to get elected next year, right? Generally speaking, during those times, there's a little bit of volatility in the market because now we have uncertainty, right? So we don't know who's going to be the president. We don't know what their policies are going to be. We don't know what direction they're going to go in. There's a lot of things that are out there, right? So 2024, from an investor standpoint, should be a good time to be able to come in and get some deals because there's going to be a little bit of uncertainty. And usually when there's some uncertainty, that's when opportunities come. But the most important thing is to make sure you're ready. So make sure you have all your financing together. Make sure you have your lenders together. Make sure you have your investors together. And obviously make sure you have your team together, right? So this is a brief overview of what I see right now in the market and what I kind of see it'll be over the next 6 months. So stay tuned for the next episode.